Physical Gold Fund presents The Gold Chronicles with Jim Rickards and Alex Stanczyk. Insights and analysis about economics, geopolitics, global finance, and gold.
Hello, my name is Alex Stanczyk, and welcome to episode 93 of The Gold Chronicles. Today is May 21st, 2020. I have with me today my friend and colleague, Mr. Jim Rickards. Welcome, Jim.
Thank you, Alex. Great to be with you.
Before we dive into the podcast, you can access an archive of podcasts and transcripts going back several years at www.physicalgoldfund.com/podcasts. For those of you new to the podcast, Jim Rickards is a best-selling author of numerous books. He's a well-known and respected expert in geopolitics and a number of other subjects. At different times throughout his life, he's been a lawyer, an economist, a hedge fund guy. He's been tapped off and on by the U.S. intelligence community for his insights and perspectives. Jim is one of the smartest guys I know, full stop. He's been a friend and mentor for many years now. If you haven't read Jim's books, I encourage you to do so. His books include Currency Wars, The Death of Money, Road to Ruin, and Aftermath. For those of you who are interested in gold, new to gold, want to know more about it, he's also written The New Case for Gold, which many do not know, but we've co-developed that from material from these podcasts, as well as obviously Jim's research and his own amazing mind. We've got a lot of topics today. Let's dive right in. So Jim, like myself, you're a lifelong learner. You're always doing research, always reading. If you had to name one topic right now that is holding your focus, what is it and why?
Well, it's a great question, Alex, and I have to say it's two topics that are joined together. They're they're kind of inseparable. And you can say they're obvious ones. It's the pandemic and the economic depression. And you say why? They're big topics. You know, you should know about them. But I'm actually working on a new book. It'll be coming out. It's on a very fast track. Often I take a year and a half or 2 years to write these books. And my publisher said, "No, we want this one yesterday." So we're working very, very hard on it. We'll be announcing it soon. We'll have an Amazon page and all that stuff. But I'm working on it. But it's on the pandemic and the depression, the two topics I mentioned. And this should be one of the first books on the topic. And so when you do research, like, well, how do you research a pandemic if we're in the middle of one? And the answer is there's a lot out there, but you have to go back to prior pandemics. So I find my day consists of, waking up in the morning, writing as long as I can write. Usually after 2 or 3 hours, my brain sort of turns to jello and I can't do a lot more than that. But writing for 2 or 3 hours on the pandemic. And then for relaxation, I'll read a book on the pandemic of 1918. And then I'll go to bed and dream about pandemics. So it's sort of all absorbing right now. A fascinating topic. And I don't lay claim to being a virologist or an epidemiologist, although I point out that two things. Number one, epidemiology is about half medical science and half math. And I'm not a doctor, but I'm pretty good at the math. So once you establish a certain number of factors or make assumptions about the inputs based on the best available information, it's just superlinear mathematics. And so I'm pretty comfortable with that. And of course, when you get over to the depression side of it, public policy and so forth, that's what I do for a living. That's what I do all the time. So I feel, and I've read a lot of peer-reviewed papers, and I can raise my hand and say I have 2 degrees from Johns Hopkins. So I think that makes me an honorary doctor, even though I'm not one. But on a serious note, the epidemiologists and the virologists are saying to people like me and others, hey, shut up. What do you know about virology? What do you know about epidemiology? We're in charge here. And I say, well, fine. Can we, how come you're dictating economic outcomes? In other words, if you want to say that an economist doesn't understand epidemiology, I could raise my hand and say, what does an epidemiologist know about the economy? And the answer, of course, is what we call team science, people working together cooperatively and sharing views. But I think we've fallen into a trap of letting the scientists dictate economic outcomes without enough economic input. And so I'm not shy about treading on their territory because they're treading all over my territory and indeed America's territory, which is, do we really need to shut this economy down to the extent that we did? There's
Sure.
certainly room for mitigation. No one really would argue with, why don't we cool with the handshakes, and maybe there's a time and place to wear a face mask, and social distancing in the line is not a bad idea. There's stuff like that, but I'm very, very doubtful that we needed to go to the extremes that we did. And then every time they say, well, we're saving lives, I'm like, okay, you probably are, but you're also costing lives. Alcoholism, drug addiction, suicide, domestic violence, so-called deaths of despair. Let's not discount that at all. And when you add it all up, I think there are probably some better solutions. So short answer is I'm immersed in the research for this, and I'm working hard writing, and we'll have something for readers and listeners, kind of in midsummer.
Outstanding. Looking forward to that. That thing that you mentioned about there's a lot of talk about listen to the science, listen to the scientists, all that type of thing. And something that concerns me a great deal about that is that there was a time in human history where the scientists were actually burning people alive for disagreeing with their views.
Right.
And I think we need to be super careful about that, especially as it affects things like our freedom and liberty and our ability to earn and feed our kids and all those kinds of things, which we'll talk more about in a few. So
sorry to if I could just interject quickly. I agree with that. It is good to listen to scientists. The problem is, even when you put the fringe thinkers and the conspiracy theorists and the people with bad intent, put them to one side, and that's not always easy. The filtering is an important part of it. And you say, okay, I'm just going to read, peer-reviewed scientific papers, or even an interview, an article from someone who's a well-regarded epidemiologist, or whatever. What I find is that the scientists don't agree.
yeah,
It's not as if the scientists are all saying one thing and you're like,
right.
Oh, you're a dope if you don't listen. It's like, no, I got one guy. Again, I've got a stack of research here on my desk. I got one guy saying face masks, you have to wear face masks. Don't go out without them. I got another guy saying they do absolutely no good. They'll make you sicker because you're recycling carbon dioxide. Okay, fine. I got 2 PhDs telling me opposite things. So
Sure.
yeah, I'm all for listening to science, but you need to kind of fish with a big net, so to speak.
Absolutely. It's where discernment comes into play, right?
Right.
Okay. So we're 3 months into the various degrees of stay at home. And right now, so despite stock markets being pretty happy, based upon what the Fed's doing, basically buying everything in sight. Just this morning, there was another 2.4 million unemployment claims filed. I think it brings the total to over 38 million in just 9 weeks.
Right.
Credit cards, auto loans, mortgages, rents aren't being paid. The media has been remarkably quiet about how many small businesses are failing. I'd really like to know more about that. But something that I'm curious about is your view on what this looks like moving forward. I know we're in a massive sort of deflationary environment. We're seeing food supply chains having sort of problems. What I'm curious about is, what does the market psychology have to look like to lead to more inflation and possibly even hyperinflation versus a massive deflation?
Well, that's a 5-part question, so let me try to unpack it a little bit. The first thing I would say is that there's never been a time when the stock market was less reflective of the economy, where, put differently, the disjoint between what's going on in the real economy and what's going on in the stock market have never been greater. And people say, well, come on, Jim, don't you know the stock market is a discounting mechanism? It looks forward. Today's stock price isn't about today's economy. It's about where the economy is going to be 6 months or a year from now. And it's this great discounting mechanism, so get with the program. And I say, first of all, I have a pretty good idea what the economy is going to look like 6 months or a year from now. It's going to look awful. And so don't lecture me about the discounting mechanism of the stock market, because that's not what the stock market is doing, number one. Number two, can we please bear in mind that the S&P 500 is a cap-weighted index? In other words, the Dow Jones is not. There's a complicated formula behind the Dow Jones. That's a different story. But the S&P 500, which most institutions say, well, that's our benchmark, that's our bogey, is a cap-weighted index, which means that the larger your market capitalization, the more weight that you carry in that index. So it's not as if they add up the prices of 500 stocks and divide by 500 and say that's not what they do. They in effect multiply, where they take the market capitalization, which might have nothing to do with earnings or anything else. So the S&P 500 is really the S&P 5 or maybe the S&P 6. There are 5 or 6 companies, and we all know who they are. This isn't mysterious. It's Facebook, Amazon, Netflix, Apple, Google, or so-called Alphabet, Microsoft. There are 5 or 6 companies. If you add up their market capitalization, they dominate that index. Whatever they do, the S&P is going to do. So first of all, don't tell me that the stock market is discounting the future, because the stock market is completely detached from the future, number one. Number two, the stock market is 5 or 6 companies, not the other 495 are just treading water or going down. Now, yeah, there are some particular companies, maybe Zoom is doing well, and some of these pharmaceutical companies are doing well. Sure, that's always true. But, why wouldn't Facebook, Google, Amazon, Netflix, and Apple and Microsoft, why wouldn't they do well? They're all digital. They're all, okay, Amazon has physical delivery, but they've got that pretty well sorted out. But it's online execution followed by physical delivery, and the rest of them are all online. Google doesn't ship anything to my house. It's just a search engine, and it's a lot more than that. It's a big advertising platform, of course, and it's a bunch of other things. But these are companies that have not suffered from working from home. They have not suffered from people in quarantine. In fact, in a lot of ways, they prosper. So should those stocks be going up? Well, I don't know them. I'll leave it to investors, but maybe they should. But don't confuse a cap-weighted index where 5 or 6 companies dominate the index, and those companies are relatively unaffected by the pandemic. Don't confuse that with the health of the stock market as a whole or the health of the economy. They're very detached. And then just one more thing is that I believe the correct number is 95%, but I'm certain it's over 90%, perhaps 93, 94% of all the trading on the New York Stock Exchange is robots. It's done by robots. And when I say robots, I'm not talking about order matching systems where, I'm a seller and you're a buyer, and there's a computer somewhere that connects us and you're done. I'm not talking about that. That's been around since the 90s. I'm talking about situations where the computer itself makes the decision.
Right.
And then how do you make the decision? Well, you have algorithms. Okay, when were the algorithms written? Probably before the pandemic. Wish everyone well, but some 27-year-old H-1B visa engineer in Silicon Valley has never even been to the New York Stock Exchange, but they're the ones writing these algorithms, for one thing. They haven't been updated for the pandemic or the new depression, but they contain their basic code, which is buy the dips and read the papers, or not the papers, but read headlines. So they're scanning all these headlines, and they do have a buy the dips buy. So when stock prices get low enough, and somebody's got some good news, and Facebook seems okay, buy them, bid them up, and then the people with the 401ks, what are they doing? Well, they're not trading stocks; they're in index funds, so they're along for the ride. And so all this stuff is going up, and I'm looking at what you mentioned earlier: 38 million unemployed. We're talking about GDP in the second quarter. I get 100 emails a day from various research services, and obviously only the good ones. I mean, I don't read a lot of junk. And every time they update, they say it's worse than we thought. It's worse than we thought. Yeah. So second quarter GDP might be down again on an annualized basis, 40%. That's $8 trillion of annual output if you annualize it. Now it's only one quarter, so I don't know, maybe it'll be off the bottom in the next quarter, maybe it will. But even if you divide by 4, you're talking about $1 to $2 trillion of lost output. You can't tell me that's not going to have repercussions that go well into the 2020s.
Yeah. Just like we were talking about the last time we did a podcast. These are great next Great Depression numbers, right?
Right.
So talk to me just briefly about the psychology that could lead up to what causes velocity money to pick up. We've talked about this kind of thing a lot in the past. And there are are kind of two schools of thought. One school of thought says is that money creation leads to inflation, but I think you and I both agree that that sets the sort of the foundation for that, but it won't happen unless there's velocity. So what happens in your view? What has to happen psychologically? What are the things we want to be watching for that will start to lead towards more inflation and ultimately, if it does happen, some kind of hyperinflation of the U.S. currency?
Well, you put your finger on it. It's psychology, but okay, fine. What kind of psychology? It's the psychology of expectations. Inflation will happen when enough people think inflation is going to happen. Now, I understand that's a circular argument, but that's what recursive functions look like. That's how complexity theory works. So what's the expectation today? Well, the answer is deflation. No one's expecting inflation. You know, if there are a few Milton Friedman followers out there, or a few monetarists, or a few neo-Keynesians who still think that printing money causes inflation, I would first of all suggest the last 12 years kind of refutes that notion. But the fact is, printing money causes inflation if velocity is constant. So yeah, the quantity theory money, if you hold velocity constant and you print and you expand the money supply at a rate that exceeds the potential real growth of the economy, then the difference is going to be inflation. The problem is velocity is not constant. And this was Milton Friedman's great mistake. And in fairness, through a lot of his career from the 1950s to the 1980s, velocity actually was constant. So if that's what you observed and that was your assumption, then Friedman's notion that inflation is a monetary phenomenon would be correct, except that the input's not correct. Velocity started to crash in 1998, and that's an important point. This is not a 2008 phenomena. It's not a 2020 phenomena. Now, by the way, velocity did decline after 2008, and it is declining right now. So I'm not saying those events had no impact. They continued to drive velocity down, but the steep decline started in 1998. And guess the other time when velocity crashed, 1930s. So this is a blunder I see time and time again by analysts and Wall Streeters and traders and programmers. Is you go, I got a time series. I do the correlations and regressions. I'm like, yeah, fine. How long is your time series? Oh, 20 years. I say, well, okay, why don't you try 80 years or 90 years and see what has happened in the past facing these conditions? So velocity is just the turnover of money. So why would let's say I have some money and I have a choice. I can put it in the bank and sit on it and spend very little. That's what I'm doing now. I'm not going out a lot. I take a walk in the sun, but I haven't been to many restaurants or bars or trips or airports in months. So I can put it in the bank or I can go spend it. Those are kind of my choices, or invest it. What am I going to do? Well, it depends, first of all, on opportunity. Right now, it's hard to spend money. We've actually been trying to support some local merchants and caterers and restaurants with takeout meals just to try to help a little bit. But you don't have much opportunity to spend right now. But beyond that, more importantly, what is my expectation for inflation? Well, it's negative. I expect deflation. Well, what happens to money in deflation? It goes up. The value of money goes up. You don't get much interest. It's not like a dividend or interest, but the actual real value of the money goes up in deflation. So what do people do in deflation? They save money. They save it. They save more. They save more. And you fall into what Keynes called the liquidity trap. So how do you get out of the liquidity trap? Well, you have to get people to spend that money. Well, how do you do that? You have to change their expectations. You have to change their psychology. Okay, how do you do that? Well, central banks have shown that they don't know how to do that. If printing $5 trillion and then printing another $5 trillion, which is what they're doing, the Fed balance sheet is going to cap out based on what we know now at around, $10 trillion. If that doesn't do it, and that's all you have in your bag of tricks, so interest rates are zero and you're going to print $10 trillion. If that doesn't cause inflation, then I would say, which it won't, then I would say you're worthless. You can't do what you say you want to do. And by the way, this has been true for 12 years. Fed's been trying to get just 2% inflation for 12 years, and they haven't been able to do it. Well, how are you going to get 4 or 5% inflation, which is what you need to get out of this debt problem? So, but there is one way to do it, and only one way that I can see, which is you have to raise the dollar price of gold. That gets people's attention. And so I've said before, if the Board of Governors, the Fed, went in the room, closed the door, took a vote, walked out, and Jay Powell walked up to the microphone and said, ladies and gentlemen, as of now, the price of gold is $5,000 an ounce. And if you think that's cheap, we'll buy it from you, and we'll print the money, of course. If you think that's expensive, if you think it's cheap, come and get it. We got the gold in Fort Knox. So if you think it's cheap, come and get it. We'll deliver the gold. If you think it's expensive, sell us the gold. We'll buy it with printed money. But the point is, if you make a two-way market, you're a buyer at $49.95, a seller at $50.50. Gold is $5,000 an ounce in that example.
Right.
Well, the point of doing that would not be to enrich gold holders or gold owners. They don't care. The point would be to change expectations, exactly what we've been talking about. Because the world of $5,000 gold is also the world of $400 oil and $20 copper, and there's your inflation, because everything would go up. This has been done twice by President Roosevelt and President Nixon, so it works.
Yeah, that's what I was just going to say. This isn't just theory, right? This has happened already.
It happened twice. I say Roosevelt did it on purpose and Nixon did it by accident, but that's okay. The result both times was we got inflation. I was looking at the numbers. I was kind of familiar with them, but I went back and checked. From 1933 to 1936, in the middle of the Great Depression, because the Great Depression is usually defined as 1929 to 1940. But in the middle of the Great Depression, 33, 34, 35, stock market was going up 30% a year or 20% a year. 1 year was 5%, but it was booming. But it had gone down 90%. So when you're down to 10%, even when you go up 30%, that's only 3 points. You haven't made it back to it recovered the 1929 high in 1954. It took 25 years to come back.
Right.
So we could be looking at that kind of situation, but FDR devalued the dollar against gold not to enrich gold holders. In fact, he had confiscated all the gold first. He did it to change the psychology, and it worked.
Got you. Okay. So what could lead to a hyperinflation? Do you see any percentage chance of something like that happening, and what are the odds, and what would have to happen for that to occur?
Yeah. I mean, I want to be very clear. I see deflation for now and deflation into next year. So when I talk about hyperinflation, don't expect it to pop up next month. I certainly don't. I expect deflation, but you are going to have to get to inflation. You're going to have to get there because of the debt burden. The debt to GDP ratio is, we're catching up to Italy, and we're probably not that far behind, Lebanon and Greece at this point. So you're going to have to. You are not going to be able to borrow your way out of the problem. You are not going to be able to make the U.S. economy productive enough to pay off that debt or even sustain. You never have to pay off the debt, but you do have to roll it over, and you do have to sustain it. And we're going to fail those tests with the kind of productivity we're capable of. So if you can't borrow your way out, borrow and spend your way out, and if you can't grow your way out, what else can you do? Well, you can inflate your way out. And that's the American way. That's America's been doing that since the Revolutionary War. That's what we do. And we used to be pretty good at it, but that's back when we had gold. So we're not good at it today. And so what you're going to see, I don't know how long it'll take the Fed to wake up. I mean, I'm telling you the answer. And if Jay Powell were on this call, we could have maybe nice to have a nice conversation. No central banker, no PhD economist, nobody in a tenured position at MIT, Harvard, Yale, or Chicago wants to talk about gold. They just don't. I know a lot of them. I've met, Fed chairman and vice chairman and governors. I've met them all. They don't want to talk about gold. They don't want to have the conversation we're having right now. But I've got, we talked earlier about having science on your side. I've got history on my side, which is that this is the only way we've ever been able to get inflation. Now, here's the point. Let's say that they do it. Let's say that, okay, we got to get the price of gold up, the dollar price of gold up. And by the way, when the dollar price of gold goes up, gold isn't really going up. What's happening is the dollar is devaluing. It takes you more dollars to get your ounce. I think it would go by weight. But if it takes you more dollars to get your ounce, well, that's a nice win for someone who has gold. But what you're really doing is devaluing the dollar, which is inflationary. That's the whole idea. Now, they'll wake up eventually when the damage gets bad enough. It's hard to say when. But here's the danger. you can segue from deflation to inflation pretty quickly doing what I said, which is getting the dollar price of gold up. But what is the danger that you shoot past the mark? You got to stick the landing if you want.
Right.
6% inflation would be fine. I mean, that would be it would be very damaging to a lot of investors, and those investors need to look out for that. That's a separate issue, which is what kind of portfolio would you have to prepare for this? But you start with gold. But 6% inflation would wipe out the debt in about 14 years or less. It would cut the value of the dollar in half. Sorry, it would be 12 years. 6% inflation cuts the value of the dollar in half in 12 years. Well, 12 years isn't that long. And if you could cut the debt in half, nice job. The problem is you try to get to 6 and you end up at 12 or 13 or 14, which we did see in the 1970s. And people forget, in 1977, the United States issued Swiss franc denominated bonds because nobody wanted dollars.
Really?
And they were called Carter bonds. And so you had U.S. Treasury bonds denominated in Swiss francs because institutional investors said, well, we trust the Swiss franc. We don't trust the dollar. And then inflation peaked out around 15% in, I believe, 1980. So, and of course, that's when gold went to $800 an ounce. So, yeah, it's hard enough to get inflation, although I just told you how to do it. But it might be even more difficult to fine tune it in such a way that you don't get into hyperinflation. So you cannot rule out hyperinflation.
So that's, 15%, 1980, $800 an ounce. That was a pretty famous secular bull in gold, and we're talking almost a 25-fold increase from the 70s.
That's right. But again, I'm sure you know this. Let's say gold hit $2,000 an ounce in the next few months, which I think is entirely possible, maybe even likely, and that would top the all-time dollar price of gold, which was August 2011. It was $1,900 an ounce. So let's say it goes to $2,000 an ounce, which I think, as I say, is likely. In real terms, that's less than January 1980. In other words, it adjusted for inflation. Now, in nominal dollars, yeah, that's an all-time high, and that's gone. But in nominal dollars, that $800 an ounce in 1980 looks more like closer to $3,000 an ounce. But it's going to get to 3 also. It's got to get to 2 first.
Yep. Okay, so on to a little more edgy topics. There's kind of been a big discussion lately about censorship, suppression of discussion, commentary, deplatforming people from things like YouTube, Twitter, etc. Just this morning, there was a host at one of the main media outlets. She's pushing to have the president deplatformed from Twitter.
Was it Mika Brzezinski?
I wasn't going to name any names. I'll let you.
I will.
Yeah. All right. So at the risk of that happening to us, the whole censorship, deplatforming, whatever. There's certain things that really need to be talked about. So I'm going to ask you some questions that I think a lot of people are hesitant to talk about, but we're going to do it. One of these is, so this is my view, and maybe you can put it into your own words or what you think you see happening here. But so my view is that we're seeing a polarization of the people, not just in America, but I'm talking globally. And my view is that it's not really about political parties, but it's about how people see sort of the difference between freedom and not freedom. So in other words, some people seem okay with losing it and others don't. And there are different personalities and different levels of education and intellect on both sides of the argument. But I'm seeing this happening more and more. Each side seems to consider the other side like naive about everything, maybe ignorant, dumb, whatever you want to fill in the blank with. And that the other side is wrong. So what I'm wondering, what I want to know from you is, how do you view this, and do you see this as one side or the other coming to their senses, or do you see it ending up in a much more difficult, challenging circumstance?
I think the latter. First of all, I agree with your overview. There's a lot more that can be said, but as a kind of a synopsis, and just to put a finer point on that, I mentioned I'm working on this new book kind of on the pandemic and the depression, but last fall I was working on another book, and I just put that on the shelf as I can't deal with that right now because this other book is on a very fast track, but I'll come back to it. But remember what the world looked like last fall before COVID-19, before this virus, before the pandemic, before the depression. What was going on last September and October? You had riots in Paris. Remember the yellow jackets? I'm not going to try to say it in French because I'm not good at it. There were riots in Barcelona, which had to do with separatism. You had riots in Beirut, which was a kind of the Cedar Revolution 2.0, the secular society pushing back against the warlords and the Hezbollah and others. You had riots in Chile Santiago because they raised the public transportation fee like 4 cents or something, and all of a sudden they're burning down every subway station and a bus station in Santiago. And you can go around the world. Oh, and Hong Kong. Hong Kong was maybe the biggest tinderbox of all.
Yeah.
So I was stepping back. I'm saying, well, wait a second. Riots in Paris, Beirut, Barcelona, Santiago, Hong Kong, and other places. There's, as Stephen Stills wrote, there's something happening here, and there has to be a thread. This can't just be coincidence that 10 major cities around the world, maybe more, are rioting all at the same time. And I think it does go to what you're talking about, which is, liberty versus oppressive government, income inequality. Taxes are a funny thing. They'll put a tax on you and you pay it, and they'll put more tax on you and you'll pay it, and more tax on you. But there comes a time when you're like, I'm out of here. I don't know what I have to do. Maybe you got to move to Puerto Rico or drop off your passport on the way out of town or whatever. But the point being, it's a tipping point, a critical threshold, straw that breaks the camel's back. Take whatever metaphor you like. But and so when you see riots about a 4 cent transit fee increase, that's the tipping point. It wasn't about the 4 cents. It was about 30 years of increasing taxation, and finally you pushed me too far. So that was already there. That was there before this, before these shutdowns arrived. Now, behind every government bureaucrat is a neo-fascist. There's something in the human DNA that just wants to tell other people what to do. I personally don't have it. I have a missing gene. I have enough trouble keeping myself pointed in the right direction. I'm not big on telling other people what to do, but a lot of people are. And when you have a crisis of this kind, the inner fascist comes out. The governors, the mayors, the Center for Disease Control, the epidemiologists, they're kind of inner fascist comes out, and they're not limited to getting supplies where they're needed. Personal protective gear. Ventilators, although the ventilator thing turns out to be a fiasco. It probably killed more people than it saved. Masks, intensive care units, the hospital, whatever it was. Getting that stuff to people who need it is a big deal. That's what leadership is about, and that's what your executive position should be about. Let's get help to people who need it as fast as possible. And there was a lot of wrestling about that. But then they said, well, no, by the way, who is it? The governor of Michigan, I'm not sure, Gretchen Whitmer or something like that. Mm-hmm. She said she was coming up with they love coming up with lists of essential and non-essential businesses. In my opinion, if it's your job, it's essential. If it's what you do to put food on the table for your family, it's essential. So that's an arbitrary distinction. But she decided that, they shut down barbershops, hair salons, gyms, all this stuff. But she prohibited the sale of paint and carpets. Why? I mean, what is? It's not like they're using lead-based paint. It's not like they're noxious fumes. It's not like carpets are going to spread coronavirus. And if you're working in my house, it's just come on in and work. And it's not like we got 50 people watching a football game. So, but why paint and carpets? Well, the answer is it's the inner fascist. She can't resist bossing people around. We saw it with the I don't know the name off the top of my head. It was Sharon, the hair salon owner in Dallas, Texas, who was arrested and sentenced to a week in jail.
Right.
A week in jail for cutting hair. Now you could have given her $200 summons on what's called a violation. Violation is not a crime. It's what you get when you get when you get a speeding ticket. That's actually not a crime. Reckless driving is a crime. Speeding ticket is called a violation. It's not a crime. You could have given her a $200 violation, said, mail it into and she probably would have paid it. But no, they arrested her. There was this Tillis gym in New Jersey the other day where they were arresting customers because they wouldn't give. The cops are waiting outside, and they were handing out summonses, and they have to ask your name, and the guy wouldn't give his name. Well, why should he? I'm like, hey, you got a warrant? What's this all about? Who gave you the right to stop me on the street and demand my name? It's like, people trying to escape Nazi Germany when they asked to see your papers. That's what we've come to. So not to belabor the subject, but this has empowered a lot of political leaders. Their inner fascist is out. The neo-fascist is out. They can't wait to tell people what to do. And just to make it worse, and I'll leave it at this, there's what I call the liberal progressive ratchet. And you know what a ratchet is. You turn it one way, but it doesn't turn back.
Right.
Now, it doesn't mean you can turn it more the next minute, but it does mean it never goes back. And someone said to me the other day, well, New York City is taking all these streets offline. They're saying these streets are closed to traffic. Okay. They will never be reopened. When this thing is over, you're going to find that the mayor wanted to close the streets all along. All he needed was an excuse. And so don't expect them ever to reopen. And that's the problem with all of this. I can pick on Mayor de Blasio on the streets in New York, but it's true across the board. When they start issuing these orders, and the virus, diminishes, and it's kind of safe to go outside, they're not going to reverse the order. Some of them, yes, but a lot of them, you'll find that they were trying to do it all along.
Sure.
This was their excuse. So that's the liberal progressive ratchet. And by the way, if you study the history of fascism, which I have, you'll find that it came from progressives and socialists. Mussolini, who is the father of 20th century fascism, said that his greatest inspiration was Woodrow Wilson.
Amazing. Okay, so for me, 2 quick comments on this, and we'll move on to the next topic. We have 2 more things to hit before we're done here. For me, number one, the whole concept of allowing a politician to pick winners and losers economically is extremely dangerous. Basically, what that means is this politician gets to decide this business gets to prosper, this business gets to fail. These people get to feed their kids, these people do not.
Correct.
That is a very dangerous, slippery slope in my mind. And then the second thing that I find really interesting, because I have a background in the military. I have a brief law enforcement background in the military as well. But there was a video done by a police officer talking about how certain actions by governors, et cetera, and then also police officers are violating constitutional rights of U.S. citizens. And I got real curious about this, and I looked it up. There is a section. It's USC Title 18. This is on the U.S. Department of Justice's homepage or website. USC Title 18, Section 242 basically says that any law enforcement officer, judge, or public official that denies or infringes on a U.S. citizen's constitutional rights under color of law, meaning they pass, a governor writes an executive order, or they pass some kind of law or whatever that is contrary to what a United States citizen's rights are under the Constitution, that's actually a crime.
Yep. Well, first of all, that's right. But the U.S. Code is a big document. You referred to Title 18, which is the U.S. Criminal Code, and you're right about that part of Title 18. But there are other titles in the United States Code that deal with national security, and they're a lot scarier than the one you just read. And by the way, I cover this in chapters 1 and 2 of my book, The Road to Ruin. By the way, one of the comments, because I'm very active on Twitter and I do a lot of public speaking, and I've been living on Zoom lately, so I get a lot of questions and answers. But one of the things I'm hearing a lot, the books, including Currency Wars, which came out in 2011, are selling extremely well because my publisher's thrilled, and I'm happy about it too. But it's odd to see a 10-year-old book still selling, almost like a bestseller, not quite. But people say, Jim, I wish I'd read your book, 2 years ago. I wish I'd read your book, 5 years ago. Well, Aftermath came out in November 2019. That book's only been out 6 months, and pick it up and read it now. It told you everything that has happened in the past 6 months. And I say, well, first, thanks for buying the book. And secondly, it's not too late. Yeah, maybe you would have been a little bit ahead of the curve if you'd read it 2 or 3 years ago. But it's not too late, because this is going to get worse and these trends are going to continue. And it's not too late to get into some of the allocations we talked about. But my book, The Road to Ruin, which came out in 2016, the first 2 chapters talk about what we're talking about now. And a lot of these laws were enacted. Some of them go back to the Trading with the Enemy Act of 1917. But these laws were enacted in the 1950s because we were preparing for a nuclear attack. The question was, what would the United States do in the event of a nuclear attack? How would we, it's called COG, continuity of government. I have a friend who's working on COE, continuity of the economy. That's I'm sure we all wish we had figured that one out a couple years ago. But continuity of government, they'll land helicopters on the mall in front of the Capitol. Members of Congress will come out to the helicopters. They will be taken to either Raven Rock or Mount Weather, which are not too far away in Virginia. And Raven Rock is kind of on the Pennsylvania-Maryland border, not too far from Camp David. There they have these underground complexes, which can talk to each other and kind of, in theory anyway, run the government. So the government's figured out how to take care of themselves. They haven't really thought much about taking care of us. Abraham Lincoln declared martial law and suspended habeas corpus, and that was constitutional because we have a law that says you can declare a martial law, mobilize the National Guard. So, but having said that, Alex, you make a very good point. I think the International Emergency Economic Powers Act of 1977 makes the president a financial dictator in the event of a national security issue, which I think we've got those galore. So the laws that exist that empower government officials to act in an emergency capacity in ways that we would normally regard as dictatorial, they're already on the books. You don't need Nancy Pelosi or Mitch McConnell to pass these laws. They're there, but they were done in preparation for a nuclear attack. Well, how about a pandemic? It's, maybe not too far removed. Having said that, these executive orders issued by the governors, to the extent that people have been able to litigate them, and not everyone has the resources or the time, but to the extent that people have been litigating them, they're winning almost every time. In other words, the governors are losing these cases in their own state courts. The Wisconsin Supreme Court overruled. The governor shut down. The governor of Texas went the other way. He overruled a local judge who would imprison this lady who's the hairdresser around a salon. So citizens are winning these cases for exactly the reason you mentioned, which is that the executive authorities, which would be mayors and governors, are exceeding their authority. They're just doing stuff. They're making stuff up. They don't have the legal authority. And then the police who are executing these orders are probably breaking the law. I'm sure they just think they're doing their duty, but they're probably breaking the law when you carry out an unconstitutional order.
Yep. Yeah. And as my perspective, warrior code wise, is that the job of these people is to protect the citizens, not to mess with people who are just going about their daily lives trying to do their thing,
Yeah, well, I was wrestling with that because, as I said, I'm writing this new book, and one of the things I included in the introduction, I said, well, I can't just write a book, and obviously you can make money on a book. I said I feel like doing something that is, or I asked myself, am I doing something that is exploiting the hardship of others? And I said, the answer is no, if 2 things are true. Number one, you have to offer advice and guidance and help people. So if the book helps people, then I'm very, very comfortable with that, and I'm glad it can do that. But I also put in a big thank you. It's, I said, look, there's a lot of problems to go around. There's a lot of disaster, but we have a lot of heroes. And I start, doctors, nurses, emergency medical workers, attendees, people just cleaning the streets or cleaning rooms or, disinfecting, and everyday citizens putting it. So we have a lot of heroes, but I had to, the National Guard, the Army Corps of Engineers, which built that hospital in the Javits Center, like overnight. Franklin Graham, who put up a tent hospital in Central Park. I mean, a lot of heroes. But I had to hesitate a little bit when I got to the police. I'm like, well, whose side are they on? I mean, are they Are they doing what the Army Corps is doing and what Franklin Graham is doing, and many, many others? Or are they, are they the shock police? So I don't know. I mean, yeah, the answer is you can't generalize, and I'm sure there are plenty of cops who are heroes, and you have to say that. But it did make me think.
It's both. I think it's both.
Yeah, I think both is the right answer. Yeah.
Yeah. Okay, so I wanted to ask you about the upcoming 2020 presidential election. I think we were going to save that for the next podcast because there's something else I want to hit real quick, and we're just about out of time, and that is a couple of different things. There's like some theories floating. There's been some mentions of reparations for China in terms of there are some folks who believe that China's got some responsibility in terms of how damaging this pandemic has been.
Yep.
And that there's talk of reparations. One theory is that it might take the route of canceling their treasuries. I don't know if that'll happen. I'd like to get your opinion on that. And then the second thing is there's also been some discussion of delisting Chinese companies on U.S. stock exchanges, which ultimately, the third part of the question, I guess, is does this move us closer to war?
The answer is yes, yes, and yes. Let me break that down a little bit. First of all, there are plenty of ways to, well, you know as well as anyone, the oldest joke in banking, if I owe you $1 million, I have a problem. But if I owe you $1 billion, you have a problem because you have to collect from me and I can just default and sleep in tomorrow and it's your problem. Right. But what if I owe you 1.4 trillion? So all this stuff about, I've been dealing with this for over a decade in all these national security forums where people, China has us over a barrel. We owe them 1.4 trillion dollars. They got us by the whatever. And it's not true. The opposite is true. Hey, if I owe you 1.4 trillion, you got a big problem because I'll think about whether I want to pay you or not. And so it is a great resource for the United States to compensate ourselves for Chinese damages. So one scenario would be you'd go into court, good old federal district court, and with a, probably an 800-page complaint, maybe a class action, maybe not, maybe there's some other statutes. And you would sue China for about, say, $1.4 trillion. Let me just pick a number out of that. Look, the lost wealth is multiple trillions. Look at how much the stock market went down, the lost output. We're into the multiple trillions. So let's just pick a nice round number, 1.4 trillion. And you win the case. Well, now you have to collect. That's always the first thing lawyers learn. Everyone's like, oh, you learn how to win a case. It's like, no, you learn how to collect in case you win. So you just basically serve you get a marshal or somebody to serve the Fed and say, we'd like you to freeze the Chinese account to pay us the 1.4 trillion they owe us. Well, that's technically not a default. That's a perfectly legal process. They'll let China come in and defend themselves, let them hire, Covington and Burling or one of these, deep state law firms and defend themselves. Maybe they'll win, but maybe the plaintiff will win and they'll owe us 1.4 billion. And at that point, you're not defaulting on the bonds. You're just collecting. You're just seizing an account, which, by the way, is people always ask me what I think about cryptocurrency. I say I love them. The dollar is the greatest digital cryptocurrency in the world. But the Fed and the Treasury keep those ledgers. So that's one way to think about it. Another thing, the president could do this today with one phone call without litigation. You could freeze the Chinese account. You don't have to seize it. You could. You don't have to take it. Say, hey, China, they're still your bonds. No worries. They're accruing interest. We're going to keep real close track of that. But oh, by the way, you can't sell them until further notice. And we'd like to see you on your best behavior. By the way, you could do that. That's not a default. That's not stealing the property. That's freezing the account, which we've done. The U.S. is very good at this, by the way. So we got Bear Aspirin in World War I. We took it from Bar AG because they were Germans, and we used the Trading with the Enemy Act to get ourselves an aspirin company. And we did it to Iran. We do it to people every day. So it's a bigger ticket, but you don't have to steal the money or take it. You could just freeze it and hold it and not let the Chinese have it until they shape up. Another possibility, and then people say, oh, no, you can't do that. You'll destroy the U.S. government securities market. You'll destroy the credit of the United States. Why? By the way, I was general counsel and chief credit officer of one of the largest government securities dealers for 10 years. So
Yep.
long before I stepped into the hedge fund world and a lot of other things, I spent my life in the government bond market. And I would say, well, wait a second. If the United States has 22 trillion of debt, which we do, and you take 1.4 trillion away, so you don't have to pay that, I like your credit better. I think you just improved your credit because you don't have to pay as much. So I think people need to think hard about these things. I think the Chinese need to think hard about these things. I've been to China quite a bit. I've met with everyday people. I've met with peasants. I've met with government officials, and the everyday Chinese people are very nice. I love China, but the government officials are evil, for want of a better word. But you say, well, gee, don't you have the smartest people, the greatest scholars, the greatest resources, and intelligence service? Can't you figure this out? And the answer is no. They really have a hard time figuring out Washington. But although I tell people Americans have a hard time figuring out Washington as well, so it's not just the Chinese. But things that may seem obvious to you and me are a lot less obvious to the Chinese. It's not because they're dumb; it's just because there's a cultural outtrade where they can't quite bridge the gap. But if I were China, I would be trying to figure this out because I think it's real. And then if you said, can that lead to a shooting war? Well, that was the history of the 1920s and 30s, and that was what my first book, Currency Wars, was about. So in the 1920s, you had a knockdown, drag-out currency war. By the 1930s, it had turned into a trade war and the Great Depression. And by 1939, Hitler invaded Poland. So that sequence of, first currency wars, then trade wars, then shooting wars, has proved true in the past. And so the currency wars started in 2010. So I talked about in my book. The trade wars, pick a date, but you could say January 2018 when Trump slapped the tariffs on Chinese washing machines and solar panels. And that got a lot worse. And now even that's, going on 3 years ago. Are we at the stage where the shooting war is on the table? Well, the president and Secretary Pompeo sent congratulations to the new president of Taiwan, and they were not treating her like a regional governor of a communist Chinese province. They were treating her like a head of state. So that's the kind of thing that combined with everything we're talking about could set the Chinese off. And I would say if we did seize or freeze their $1.4 trillion of treasury bonds, which we may end up doing, do they jump over the Straits of Taiwan or do something crazy in the South China Sea or, crash into India? I don't know. I don't think you can rule it out.
Yeah, very good. Okay, it's been a great discussion today. I really appreciate it as always. And you take care of yourself out there. I know you're in your undisclosed location off the grid. And,
I call it the Corona-free mountain.
Excellent. Okay, stay safe, and until next time, thanks a lot, Jim.
Thanks, Alex.
You have been listening to The Gold Chronicles with Jim Rickards and Alex Stanczyk, presented by Physical Gold Fund. Recordings can be found at physicalgoldfund.com/podcasts. You can register there for news of upcoming interviews with Jim Rickards and other world-class thinkers.